Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's April 3rd here. Hey, we got kind of a light day today. Nothing on the economic calendar. Again, this week is jobs week. So tomorrow we'll have the ADP employment numbers coming up, which could be kind of a market movie as it's kind of like the prelude to the BLS's job numbers coming out on Friday. And then, of course, we always get the weekly jobless claims on Thursday. Also tomorrow we got the FOMC notes coming out tomorrow, so that could create some volatility in the market if there's any surprises in there that investors weren't aware or didn't think about. That could create some possible volatility in the markets as well. One of the things to keep an eye open for is the wages, how much they've increased and how much that may put pressure on inflation coming up. That word inflation could be coming up again as we approach this new month here, and that could be a concern to investors. And of course, that would be have adverse effect to the bond market, meaning that the bond market could have a negative reaction to it as it's the arch enemy to bonds as bonds are over a long extended period like 30 years. When you have these higher fluctuations going up, it erodes the value of that bond, and of course, that's the last thing bonds will want is high inflation. So let's kind of move on here. Again, as we said, it's a mixed. It started off actually mixed, and now it's kind of got positive as I started this. What was going on was the Dow was up about 60 basis points or 60 points, and now it's kind of taking a little bit more steam, and now it's reaching about 200. S&P was kind of teetering back and forth between negative and positive territory. Now it's up about 19. And NASDAQ was negative. Now it's up about positive, about 50, a little over 50 points right now so far this morning. Again, that could all change. It's been kind of taking this cue. Yesterday, as we saw, it took pretty much a big backlash, especially later in the day. And it didn't quite hit the stop at the lows, but it did pull up, but it was still not too pretty. One of the biggest things about it, again, is what's on their minds are the tariffs that China just placed on the U.S., which brings up a possible global tariff war. But in the background, as we know from late last week, which kind of eased some concerns, is that there's the back channels are discussing. And it's just kind of it's a method for them to get to the table and renegotiate these trade pacts. And the second item, of course, this high-tech industry as a whole has been kind of under a slump of late. So as it really kind of brought things up last year, this so far this year is kind of bringing things down a bit with the so many different things going on, from Facebook's privacy issues going on to Amazon being kind of under attack from the president to Tesla. A lot of different things kind of going on here, and right now the industry as a whole is been slumping a bit here. Here's a look at the bond market. Bond market, as you see, we've been kind of this midway pattern here. We've been testing this 25-day moving average, which is, obviously we like to stay above it. But at some point, as you can see, the 50-day moving average is coming down. We got the 25-day moving average kind of rising a little bit, and that could create a crunch there to push us either one direction or lower. Now, again, we got more side to the negative for us for bond market, primarily because as you may have heard us discuss before, the Fed is reducing their overall demand for mortgage-backed securities and treasuries, so they're not looking to buy more, and they're trying to unload some of their balance sheets after that kind of easing. So as a result, that means there's going to be less demand for this, and as there's less demand, the bond market will continue to rise down, which will raise interest rates even further as we go, approach this coming year and in the future until the Fed has to reverse course and go backwards. So here's a look at the 10-year Treasury, where again we're down below the 50-day moving average, but it's going up a little bit. It's been rising a little bit. We're up to about 2.78 now. As you can see, we were down to about 2.72, and now we're all up to 2.78. Again, this is the treasuries here. So that pretty much wraps things up. Our rates are a little bit worse today. Bond market, again, was right now it's been kind of teetering. Right now it's about down 12 basis points, but it's been down as much as 19 basis points this morning. So that's going to be enough to basically have most lenders price for the worst today compared to what we left off yesterday. All right, folks, so if you guys want to get more updates, just come over to Twitter. I do post throughout the day here at Mike Bjork. Anything else pops up, you'll see it on Twitter. Otherwise, we'll look forward to see you guys tomorrow. You guys have a great day. Thanks so much for watching. Look forward to see you guys again tomorrow. Bye-bye.